And a lot of people also say there's no way to pay zero tax. You'll always pay tax no matter what. Well, no, there's ways. Obviously, you need to follow the law, but you should do some things to try to reduce that. Keep more of your own money so you can enjoy it more, invest it into your business. More than half of Americans paid zero in federal income tax.
What?
They paid zero.
Are you ready? They say there are only two guaranteed things in life, death and tax. But what if I was to tell you that you can actually pay 0% of tax no matter how much you're earning? You can actually also buy yourself a passport. So in today's discussion, we're going to be diving into all of this and more, including how much it costs to set up in a tax-free nation. So hi, I'm Robbie, and you're watching or listening to the Lost Creator Podcast, a show where we interview some of the most unique and influential people in the content creation world in the hopes of inspiring you to escape the 9-to-5 and live out your dreams. Today, we're joined by not one, but two very special guests. The first being Raphael Cintron. Thank you so much for being here. You run the Wealthy Expat. You are a master in tax optimization. Thank you so much for being here with us today. Thank you. How are you doing?
Really happy to be here.
Yeah.
We run Wealthy Expat. We help high-earning entrepreneurs as well as people just starting out optimize their taxes 100% legally, essentially keep more of their own money.
Awesome stuff. And also with us today is the man himself, Los Blanc. Say hello.
Hi, guys.
How you doing?
I'm doing great. It's so lovely to be here. We're going to be drinking whiskey, and it's like, 11 in the morning?
Yeah.
Yep.
Great way to start the day.
It's a tradition.
Christian, if I'm not mistaken as well, you have some level of experience in tax optimization as well. So I think there's going to be a really, really juicy chat.
Definitely. Yeah. No, I was very excited to have Raph on the podcast, and I'll tell you why. When you guys become digital nomads and you start to leave your home country, where maybe you're coming from a place like Canada or the Great Britain, or maybe you're from Australia, you're probably paying among some of the highest taxes in the world. And what you might realize is that being away from your home country, as well as following a bunch of different procedures, can actually allow you to optimize your tax situation. So when I saw what Raph was doing, I was really curious to get a true expert onto the podcast to hear how he's doing it, running his own practice. And, I'm going to say it right off the bat, we're friends. This is not an endorsement directly of his practice, but it's a great opportunity to see what you do, hear more about your work. And, at the end of this, if it feels something like you want to explore more of it, then you can chat with Raph yourself and see if it's the right fit for you. But it's a great topic. It's one that all digital nomads must educate themselves on. And so who better to do it than Raph here?
So Raph, obviously we want to dive right in and find out a little bit more about what you do and how you do it. But before we do, and Christian, you obviously touched upon this topic, is a drink. We always love to offer our guests a drink here. Is there anything I might be able to offer you, Raphael? We've got coffee, we've got booze, we've got whiskey, vodka. Anything I can offer you? I
would love an Irish coffee.
An Irish coffee. Love that. Christian?
It's morning. I need my coffee and I need my whiskey.
Brilliant. I'll just go for the usual. So
just whiskey.
Yeah, just the one.
Thank you.
As if by magic, the drinks are suddenly here. Not being in my frame. There we go. Thank you. Oh, thank you so much. All right, cheers, lads.
Cheers.
Over there, careful. That's a very, very full coffee.
Yeah,
that is a lot.
I'm going to cheers you from a distance there, Raphael.
Cheers.
All right, Raphael, let's dive right in. Tell us all about yourself. Tell us about what you do, how you do it, and more.
Everything I talk about, I've done it for myself. I basically started off in Puerto Rico, which is actually a tax haven. People move there to pay zero tax. But I never really liked living in the United States, living in Puerto Rico. So I traveled all over. I've been to over 65 countries right now. And I mainly started making money with an online business. So I didn't need to be in one specific place. But as a U.S. citizen, being born in Puerto Rico, you're a U.S. citizen, you find out at some point that you need to pay taxes no matter where you live. And then I found out, a bunch of other people just like me are paying 40%, 50%. Even some countries like Norway, they pay 62% tax, which is they give the government more than half of what they make, which to me makes absolutely no sense. Obviously, you need to follow the law, but you should do some things to try to reduce that. Keep more of your own money so you can enjoy it more, invest it into your business. So I started digging deep into this, talking to a lot of tax lawyers, tax advisors, tax accountants. And I found out that there's actually ways to lower down the tax to 10%, 5%, and even 0 with Dubai. And that's the place that I talk about a lot. And Dubai is where I set up my main company. And then from that company, you can basically pay out yourself as a resident of Dubai. And then you would also pay zero tax. For US citizens, it's a whole different ballgame. You pay tax no matter where you go. So the only way is to get another citizenship, renounce the US citizenship. But for most people around the world, you can live in a tax-free country. And it doesn't have to be some island in the middle of nowhere. That's what people think. They need to go live in Bermuda, in the middle of the island with 10,000 other people around them. No, you can go to Dubai, very developed, very well, let's say it's structured, futuristic place, pay zero tax and enjoy a great lifestyle. And you can also travel around. You don't need to be in Dubai 365 days a year.
That's a really interesting point you bring up, because I think a lot of people have this misconception that, you know, you have to go to the Cayman Islands and live on your boat or something crazy. But the truth is, as you said, you can actually have a good life and you can choose a new destination. A lot of, you know, Asia has much more advantageous tax rates. There's places like Singapore. Even Indonesia has like some systems in place that, while kind of convoluted and confusing, I've had to hire people, they are still much cheaper than, let's say, paying taxes in Canada or in other destinations. Now, I'm not an expert on this, but one thing I know is that, yeah, Dubai has incredible advantages to it. So you run a practice where people are kind of investigating. They want to figure out how to pay less tax. They want to figure out the best place for them to live. Do you set up your clients in multiple destinations, or is it all in Dubai?
Mainly Dubai makes the most sense for most people because it's extremely fast. 30 to 45 days, you're fully set up. Other countries take years to set up, or they take this crazy structure of multiple companies, funds, trusts. And to the average entrepreneur, you're not going to spend $200,000 setting up a structure to save less than that in taxes. So Dubai makes a lot of sense because the price is really competitive. The speed is really good. And also is a place that most people can go without a visa. If you're European, you're Canadian, you're Australian, you can just show up without a visa, set up a company, and you'll basically pay zero tax as long as everything back home is set up properly. So yes, Dubai is the main one, but there's also other places. A lot of people in Europe, they don't want to go outside of the EU. So you have Portugal, you have Romania, which could also work. You have countries in the Caribbean. If you don't want to live, for example, outside of North America, Caribbean, a lot of US citizens, they don't want to go to Dubai. They think it's this crazy Muslim kingdom, which in part it is a kingdom, but it's a very free place where you can pretty much do whatever you want. They don't want to live outside of this bubble that they have. So they set up in the Caribbean, like Bahamas, Cayman Islands. Like you mentioned, that is a tax-free paradise. It really is, but it's just a bunch of islands. So there are multiple countries, depending on the budget as well. If you have $1 million to invest in a tax structure, then you can do many more things than if you have $10,000. Dubai being the main one, but there's about 8 different options that you can choose.
And so when you say here that you can continue to travel, you can continue to be, you know, outside of that tax haven that you so choose, what's that typically look like? Like if you're choosing Dubai, how much time of the year do you have to spend there? How does that work?
It depends how much time you spend in your home country. Most times you're going to need to spend 6 months a year in the UAE and Dubai. So 180 days, that's the rule for becoming tax resident. Then it also depends where you spend the rest of the time. So for example, if you are from Canada, let's say, and you don't spend any time in the year in Canada, like literally you never go back to Canada, you just travel on a Canadian passport, and you're tax non-resident, meaning you left Canada for tax purposes. You can go back as a tourist or whatever you want with your Canadian passport, but you're not there. You're not living there. You don't have a house there. Then it's a bit more flexible. You don't need to be 6 months a year in one place because you're not tied back to Canada. But it's always advisable to spend more time in the year in the place that you're claiming as your tax resident. So if you spend 3 months a year in Dubai, then don't go spend 5 months a year in Canada, because Canada's probably going to want to tax you. And they want to tax all these people that are doing this sort of playing the system. I wouldn't recommend that.
Interesting. Now, what I'm getting really quickly, and you know, I've also done a lot of research into this topic. So it's not just a matter of setting up in your tax haven. You don't just get to go to Dubai, pay for the company, the residency, and then all of a sudden you're off the hook from taxes in your home country. And obviously each home country will have different policies. But generally speaking, like what does it look like when a digital nomad or a person decides to, you know, move on and set their tax situation in a new destination? What should they be looking at back home?
Typically, it involves selling everything you have in that country. So, for example, there are different countries have different laws about this, but there's things called ties or economic ties or financial ties or family ties as well. So let's say that you have 2 children in one country. Let's say that's Australia, right? You have your 2 children, they're going to school in Australia, and who's paying for that school? Well, the tax system is paying it to an extent. They're paying the teachers and so on. So Australia is going to consider that as a tie that you have to Australia. Let's say you have a car in Australia. Well, that's a means of transportation. So that's also a tie. Then let's say that you have a bank account. Well, that's a means of supporting yourself. So that's also a tie. So the more things you have attached to that country, it's not like you can just leave and then file a tax return that you left and you're out. No, because the government will try to find all these ties for you. And if they say, let's say that you have 5 different ties to the country, they will say you plan to come back at some point. Why do you have a bank account? Why do you have kids here? Why do you have a house here? You plan to come back. So therefore you need to pay taxes. You need to continue paying. So the first thing I would do is I would cut off everything I have, unless you're a US citizen, whole different ballgame. But if you're from anywhere in the world, cut off everything you have. Home, car, bank accounts, lower them down or close them. Your family, you want to bring them with you. And then you want to find a place that has relatively low tax rate. It doesn't have to be a 0 tax place. There are countries with 3% tax rates, or Singapore with around 10, 15% tax rate, no capital gains. So if you do crypto, you sell any stocks, anything like that, you don't pay tax on it. You just pay tax on the earned income, on the personal income. So you don't necessarily need to pay 0. Then you move to that place, and all those ties that you left back home, let's say Australia, you cut off everything, you brought your family, all of that, you want to create those ties to the new place. So if you had a car back in Australia, buy a car in Singapore. You had bank accounts back home, get bank accounts in Singapore. So everything you want to change it up to the new country. So if your tax authority ever challenges it, says, hey, you're living here. No. Here's the proof. Here are the 100 documents that says, no, I'm actually living in the new tax-free place. That's very important.
So it sounds like it's not black and white then.
It depends on the country where you're leaving. It depends is the answer to all these questions, because where you're leaving, for example, the UK is a really popular jurisdiction. A lot of people, they want to get out. They want to move to Dubai. They want to move to Portugal, all these places. The UK is a very easy tax system to get out of. All you have to do is just leave. And then if you left at the right time, you're not going to pay taxes. They don't care about your ties because it's all on automatic tests. When you start spending more than 3 months a year, then you need to worry about the ties. But if you spend 10 days a year, it's automatic tax on residence. You don't need to care about anything else. Obviously, if you have companies in the UK making money, then that's a whole other story. But you could move to Dubai and not pay tax anymore. But if you come from Canada, Canada's going to want to tax you. I mean, they're proposing citizenship-based taxation. They're proposing that citizens of Canada will pay tax no matter where they go. So it's still a proposal. It's not going to happen in the next 10 years for sure.
Does that mean, so citizen, again, just to kind of make that super clear for people watching, that means you hold a passport?
Yeah, not necessarily. You could be a citizen. So if you were born in Canada, but you never claimed a passport, you're a citizen of Canada.
Oh, wow.
Because you have citizenship by birth in Canada.
Wow. Okay. That's a big deal.
Yeah.
That's like kind of closing in on the American system. Because the American system is one, correct me if I'm wrong, having that passport, the American passport basically means that no matter where you go, what you set up in any country, that passport will follow you. And it is basically saying you're paying Uncle Sam directly into the pocket of the American taxpayer, or you become an American taxpayer no matter what you do. So essentially, that then leaves you with only one option really as an American, or maybe there's a few, but you got to get rid of your American passport is what I heard, right? You have to actually relinquish it and get a new passport elsewhere.
Well, it's renounce. Relinquish is more when you fight for a foreign army. Then you relinquish citizenship because you're fighting for China or something. But renouncing is the voluntary act of giving it up. You go to an embassy, you wait a month, 2 months, and you give them the passport. You make an oath that you'll never be able to go to the US without a visa or a visa waiver. And you become a non-US citizen at that point, and you pay 0 tax. But what a lot of people don't know is that, for example, you might be from the Netherlands, right? And you've lived all your life in the Netherlands, but you were born in the United States, and your parents left when you were 3 months old. You're liable to pay taxes for the rest of your life.
in the US.
Because the US has citizenship by birth.
Yeah.
And that's what's called an accidental American. And what might happen with Canada is accidental Canadian as well, because a lot of people are born in Canada. For example, a lot of Russians and Ukrainians and all this, they do this. They move to Canada, they move to the US, have their kids there, and then go back. So their kids are accidental citizens of the country.
Raphael, if I'm not mistaken, you've actually gone through the process of renouncing your US citizenship. Is that a process that's been complete? Is it a process you're still going through, or?
There's still one more appointment that was canceled because the visa that I tried to get in Armenia, that was the country that I was going to renounce in, was not approved in time for my other passport, which is St. Kitts and Nevis. I got it by investment. Can also talk about how I bought a passport. How you can legally buy a passport, but it was not approved in time, so they moved my appointment up a couple of months for now. So that's not approved yet.
And the St. Kitts passport you got, that was citizenship by what was the word you used there? It was
Investment.
By investment, and you invested, was it 150,000 for that specific passport?
That's correct.
And that was a few years ago. Is it obviously coming as a benefit to you now? Have you seen the benefits of it? What kind of benefits have you seen from it?
It definitely has benefits for most people if 150,000 isn't this giant sum for you. So for example, with 150K, you can do a lot, and that's people's full net worth. But if you're worth, let's say, $1 million or $500,000, then this passport makes a lot of sense because at any point you can renounce. So let's say the United States tomorrow says everybody living outside the US will pay 40% tax or 50% tax no matter where you live. On your company, on your personal income, on everything, I would renounce the next day. And I would force the embassy to just take my passport forever. Because now I pay very little tax rate. My company pays 0 and I pay very little personal income because I pay out myself very little. I don't live a super luxurious life. So, and that you can do as a US citizen. Let's say if Canada puts the same rules, you could pay 0 at the company level. So your company pays 0 tax because it's in Dubai. And at the personal income level, you just don't pay out yourself that many dividends or personal income. So you can still do a lot, but renouncing makes sense for many people, specifically people that, let's say you bought Bitcoin at $100 and now it's $20,000 and you're worth $20 million. You're going to pay a 20% tax there. You're going to pay like 5 million, maybe even 8 million on selling that. So at that point, it makes sense to just renounce and then save yourself the 8 million.
Yeah, wow. So one thing too that is kind of interesting, I think worth mentioning is that, most places other than America, you get to keep your passport, right? So even though, let's say you are from the UK, you go set up in Dubai, you can hold on to that UK passport.
That's correct.
Okay. And still, you don't pay taxes to the UK.
Right. As long as everything is properly set up in Dubai and you left the UK, you can keep your UK passport. You can travel the world on a UK passport. The UK or any European country, I don't really see them imposing citizenship-based taxation. They don't have the means because the only thing that the US has that everybody else doesn't have is these giant companies, Apple, Amazon. And what happens is, let's say a bank, let's say the UAE, which they would never do this, but let's say the UAE says, America, I don't care. We're not going to report on any U.S. citizen in our country. U.S. citizens can do whatever they want here. Well, the U.S. can say, okay, then your citizens can invest in Apple, in Amazon, in Google.
Yeah, they got the big stick.
Right. They have this giant power plus the currency that the entire world uses as the reserve. The dirham in the UAE is pegged to the U.S. dollar. I mean, they have so many advantages.
Yeah.
Other countries don't have that.
Because I've set up bank accounts, I've set up crypto accounts, I've set up all sorts of accounts, and no matter what you do, you always have an extra form. It's like, I am not a U.S. It's like, dude, literally the whole world just has to respond to the IRS. It's crazy how much authority and power they have.
Yeah.
But what do you think, maybe this is too niche of a topic, but why do you think Canada would be able to get away with something similar when they don't have that power?
I don't think they would be able to enforce it. There's a lot of proposals specifically from the newer parties or the parties that get 3% of the votes. They always say citizen-based taxation. There's a lot of rich Canadians living in Dubai. And they would be able to put this law into place. They would be able to say, okay, all Canadians now need to pay it. But as a Canadian, there's not really anything they can do to enforce this. Banks are not just going to say, oh, yeah, we love the Canadian dollar. Therefore, we're going to make all Canadians, they don't care about the Canadian dollar. They don't need to deal with it. Okay, then just take it out of the system. So it's not enforceable, but it looks like they're going to make it a law pretty soon.
So obviously one of the different methods of tax optimization is through citizenship, of acquiring citizenship to another country. And obviously you'll always advise people on what might be best for them specifically. But that obviously means acquiring a new passport. How many passports can one person actually get, and what stage does it start to look a little bit Jason Bourne-y, and you got to probably put a cap on it?
There's not really any limit to how many passports. It just depends on each country's dual nationality laws. So let's say that you have the Canadian passport and you move to Singapore and you live in Singapore 10 years and you get permanent residence and you're going to apply for citizenship. The first thing they're going to ask you is to renounce your Canadian, because Singapore only allows one passport, their passport. So that's not a passport that you can have as part of a portfolio.
Yeah.
But if you go buy a passport, like me, you get a passport for 150 grand, you have the same kids. Then you go get Portuguese citizenship by living there 5 years. Then your grandma's from Lithuania, so you get Lithuanian citizenship. You could theoretically have 10, 12, 15, 20 citizenships as long as each country allows dual nationality.
Yeah.
So there's no limit to it.
Yeah.
What is the most cost-effective passport by investment? Which one's the cheapest in the world?
There's a lot of options there that are cheap, but they're not legitimate programs. The cheapest legitimate program is Dominica. It's very beautiful, natural island, and it's in the Caribbean Indies. And you can get it for 100 grand, just 100 flat fee. It's going to cost you 130 with all the fees included and lawyer fees and all that. It takes about 5-6 months, but now the waiting list is very long. A lot of people applying for Dominican passports, so it might take 8 to 12 months, but that is the cheapest. So mine was 150. That's 100. I took mine mainly because of the visa-free travel. So I wanted to go to countries like, now it doesn't make any sense, but I wanted to go to Ukraine because my ex was Ukrainian, and I basically had that issue there. And I also wanted to go to other places that only St. Kitts, the country that I picked, had visa-free travel. And then I picked that one because that's the goal.
I guess that has a lot of implications, like to renounce an American passport. There's a lot of freedoms that come with that passport, right? So does St. Kitts or do any of these other passports in the Bahamas or like, all these kind of tax-free havens, do they have visa-free access to most of the world, or are they kind of second-class passports?
They're second-class passports for sure. So with the St. Kitts passport, you can go everywhere except the big four, which are US, Canada, Australia, New Zealand. And you can't also go to Japan and other countries that people might be interested in going, but you can go everywhere else. So the Schengen area, all of Europe, the UK. St. Kitts used to be a colony of or a Commonwealth of the UK. So you can still go to the UK 6 months a year. So that's pretty good. It's better than other passports, like let's say an Armenian passport, Russian passport, things like this that are, I would say, third-class passports. Those passports that don't have access to Europe, those are even harder. But with these citizenship by investment passports, you can go to Europe and all of this. You cannot just show up in the US. Whereas with a Canadian passport, you can show up at the border and say, let me in, and they will. With a St. Kitts passport, they're like, no, go back, get a visa, wait a year to get it. Yeah.
A year to get a visa?
Yeah, it takes a while. It's a very hard process to get a US visa. Yeah.
That's insane.
Whoa.
But with also using citizenship by investment as a forms of tax optimization, even with like, let's say the one that's least costly, it's still a fairly big upfront cost. There is still quite an upfront cost there, and also a lot of these places might also require you to, if you want to spend a little bit less, be 5 years in the country. You have to spend until you can acquire that. So at what point can one really start to see that return of that first initial upfront investment in terms of that tax optimization?
I would say if you're starting out on a business and you're paying maybe $20,000, $30,000 a year in tax, that's not that much, right? You might think like, oh, I'm paying almost a car in tax every year. Well, at the global scale, that's not that much. Once you start paying multiple six figures, let's say my first bill to the IRS, to the US Tax Department, was like 180 grand, something like that. When I paid that, that hurt. That hurt a lot. And then I decided to buy the passport because I thought I paid this much in tax. I'm just going to get a passport and renounce. It's a much better idea. So when you start to get to those levels, let's say you start to make, or you have in net worth, at least $500,000, you should consider it if it makes sense for you in terms of, for example, renouncing a citizenship that you have, overall having more protection. Because, for example, with Australians, they couldn't go out of their country if they didn't have another citizenship, or if they were Australian. They couldn't come back into the country. They had a ton of restrictions during this whole issue around the world. Having a second passport protects you against that. And also in the case of, let's say, a global conflict breaks out, you have another passport that you can always, like, for example, in World War II, people that were German, they were captured. And if they had another citizenship, they would say, no, I'm not German, I'm whatever. And they will let them go. So it's these like doomsday scenarios, but having a second passport definitely protects you in many ways.
No, I hear that. That's actually, I don't know, like I find myself more and more kind of prepping my mind for a doomsday like incident, especially in these coming years. I really believe there's going to be some sort of like insane meltdown in the markets, but that's just me. But I see the appeal of having another passport because, I've even seen it in my own government. They've done things that I thought the Canadian government would never do. But now I'm like, you can never, ever put all your eggs in one basket. You have to be ready to move. I've only got one passport, but
I've got two, and I can say also that it has also caused problems before as well in the past, like traveling to the US. I've struggled with that. Bureaucracy is not great. My name changes depending on what passport I have. So because in Spain you'll take your mum's name last. On the Belgian passport you'll take your father's name last. So
Robbie was trapped in Istanbul. He missed 3 flights in a row.
Three flights in a row because of the visa. from having dual nationality. So I've personally haven't seen the benefit of it, but that's not to say that obviously with when it comes to tax optimization, again, I'm currently paying tax in the UK because that's where my business is set up as a sole trader. And so in the future, I would probably see myself returning to the UK at some point. And so that's kind of where I've kept my ties. And yeah, so it has really nothing to do with either the Spanish or the Belgian passport. But I am curious also, maybe for like, you know, let's call them the smaller guys, the people who are really kind of starting out and just getting their business going, people who really work as like myself as a sole trader individually in content creation or any other small business. How would be the best way? Like what would be the best approach to tax optimization when you're first really starting out, when we're not talking about, you know, being able to invest 150 on citizenship by investment?
Mm-hmm. I would go first and look at how much is the cost to set up in a new country. So for example, in Dubai, if you go the cheap route, you could spend maybe $10,000 to set up in Dubai. If you go with one of these companies that just churns out Dubai companies and Dubai setup. So let's say spending 10 grand on setting up in Dubai, plus probably an increased amount of money that you're going to spend every month to live in Dubai, because it's not cheap, not a cheap place to live. The faster you move out of your high tax country, let's say you're in Canada and you're making videos and you're starting to make 5K a month, 10K a month, the faster you leave, the sooner you leave, the better it is for tax purposes. Because if you leave and you have $1 million in the bank, they're going to charge you some sort of exit tax. In Canada, it's called a deemed disposition, meaning you give them all of your assets, and it's as if you die to the Canadian government. They look at it as, the death of an individual, and they analyze your capital gains.
That's so salty. They're like, you're dead to us.
Yeah, literally. That's how they look at it. So they calculate the tax that you need to pay them when you leave Canada, and then you go move somewhere else. So if you have $10,000 in the bank, they don't really care. If you have $1 million, they really care. They're going to charge you at least $200,000 to leave. So you leave.
Even if you've already paid tax on it?
No, if you've already paid tax on it, then it's already paid. But it's more of if you have it there without paying the tax first.
Yeah.
That's where deemed disposition comes in. So essentially all your capital gains, they're treated as sold on the day that you leave.
Okay. So let me ask you, because Robbie asked a great question. We obviously want to focus in on probably like 90% of people here who can't buy 150K St. Kitts passport. What kind of money do you think people need to be earning on an annual basis to start turning that idea on of like, maybe I'll set up in Dubai, maybe I'll look at getting a company formed there?
I would say at least 50,000 a year is enough, because most people that are making, let's say 50 grand in income, in taxable income, you're paying at least 10, 15,000 a year. So if you spend that 10 on setting up in Dubai, you move to Dubai. Yes, your life expenses increase a bit, but now you're not paying any more tax on everything else that you make. So let's say you're making 50 grand now, you move to Dubai, and next year you make $500,000, that's tax free instead of paying 200 grand. So I would say if you spend in taxes more than what you would spend setting up in a new country, let's say Dubai, $10,000. If you spend more than $10,000 in taxes, then it's worth it. It's just how much are you paying in taxes? That's when it's worth it.
But I suppose there's more than just a money side too, right? Like obviously there's also like, it's a lifestyle change too. Exactly. So like, you know, you'd obviously have to ask yourself, I guess, you know, are you willing to say goodbye to spending majority of your time around all the friends and family that you've come to know in Canada or whatever your home country is? So I guess it's like, it is obviously like a blurred line of like, you know, you stack all these different things up. You know, if you're making killer money, then sweet, you fly your family to come live with you or to visit you, whatever. But if you're just on that fringe and you don't expect to have like exponential growth in your income, then maybe there's a few factors that have to be kind of brought into it. Because like living in Dubai, obviously, tell me about that. Like, what is that like? I've personally gotten to know Dubai very well. I've got an apartment there myself as of very recent, I think 6 months ago. And I have to say, I really like it. But what do you think of it as, for North American, Westerner, European? Are they going to feel completely culturally shocked? Are they going to feel at home? Tell me about that.
There is a culture shock. For me, there wasn't, because I've been traveling to many different places. I've been to sort of Arabic, Muslim countries before, so it wasn't this huge shock. But I do see some of my clients that move to Dubai, and the first week they say, okay, it's too hot, or I don't like how people dress. It's this like scary type of culture. I don't like the food. The buildings they seem fake. It seems to be like a fake culture around the city. So there are some, I wouldn't call them downsides, but shocks to people that come from, let's say, Miami. You go to Dubai, the change isn't huge, but all these little things, they start to stack up. So I would say I always recommend people to try out a place for a month. So Puerto Rico is a great example. A lot of Americans, they want to move to Puerto Rico, pay zero tax. I tell them, go for a month. See how you like it. Most people hate it. And they go back to the US. They say, I'm never going there. And Dubai, I say the same thing. Go for a month, try it out, see if setting up there is a good idea. See what your family thinks about it, because there's a 16-hour flight. I think a straight flight is 16 hours. A flight with connections is about 24, 30 hours. Not an easy place to fly to. It's not a 4-hour flight. And also the time difference is huge. So when you're talking to a family, that's like a 9, 10-hour difference. It's also pretty tough. So you do need to take all this into consideration, the weather. Also, if you like snowboarding, you like skiing, you like the snow, there's none of that in Dubai.
Actually, you can. There's an indoor slope.
right there.
Yeah,
there's an indoor slope. That's
You can
true.
actually do it. It's possible, but obviously it's not. It's not the mountains. You're not off in the Alps or whatever. But
Yeah.
So not just the money, like you mentioned. There's also other things to consider. Specifically, the one that stops people is the family, spouse as well. Let's say you have a girlfriend, boyfriend, spouse, and that person doesn't want to move. They love their family. They love their social circle. They love shopping in the weekends in that place. That's going to be a big factor to you moving.
again, shopping in Dubai, it's huge as well.
Maybe they like shopping with their friends in Canada, for example.
no.
Yeah,
I'm with
you'll
you.
be all right in Dubai if you like shopping.
True. I agree.
But another thing too is I think a lot of people who think about getting up and leaving, they feel like, okay, maybe they've built up this personal home where they've got a lot of emotional connection to it. Is there a way for them to keep the home but allow themselves to release the ties that hold them back to their their home country for tax purposes?
It's tough unless you rent it out long term or there's somebody else living there consistently. It's going to be treated as a tie, because if it's an empty home, it's called essentially the home that you go back to. There's a legal term to it. And there's a lot of legal terms to all of these, but essentially it's a place that you will come back to at some point that is empty and that is available to you. You don't want to create that.
Okay.
So you want to rent it out long term. There's somebody living there 12 months a year. And whenever you want to go back, or whenever you want to go back to visit and check the place and see if it's all good, then you do that. But if it's empty, that's a problem.
Interesting. So it is possible to keep it then. It just has to be rented.
Depends on each country, their laws. So some countries are more aggressive in this. If you have a home, that's it. That's a tie. You're going to pay taxes. But most, they allow you to keep it as long as there's somebody living there full time.
Got it. Okay. Interesting.
Phil, I'm also curious to know where sort of along the lines here, because I know you mentioned that you had an online business beforehand, and this is where you started having that conversation with, advisors or people who could kind of help you with tax optimization. At what point did you start making it your priority to help others in tax optimization and kind of streamline that being what your main source of income could be?
I moved to Dubai, and then I put on Facebook, I moved to Dubai. And then a few of my friends that were also running businesses, they started messaging me like, how did you move? Who helped you move? What did you do to move? How much taxes you pay? So I started answering those questions. And then I got to the point where tons of people were asking me from the US, from Canada. Also, my clients that I had before, we essentially ran an e-commerce marketing business. We helped them market their companies and all that. They were also asking me how to lower the tax, because I know you lowered it to 0%. How do I do that? And then I thought, wait, there's a big space to this. There's not that much competition out there. And there's also a lot of people talking really half-truths. They say, yeah, move to a tax haven, pay zero tax, but that's not true. You need to do a lot of other preparation. You need to combine both things. And a lot of people also say there's no way to pay zero tax. You'll always pay tax no matter what. Well, no, there's ways. So that's why I started.
The only things in life that are guaranteed are death, something else, and then taxes. But apparently it's not true.
It's not true. So death is guaranteed, but taxes, if you do it right, you can pay zero. And then I started making YouTube videos about it. Popped off pretty quickly. A lot of people liked the videos. They started getting thousands of views. And other people that were seeking this advice, they were like, oh, that's my guy. Because typically people that talk about this are like 60 years old, 50 years old, and extremely boring. They talk about different tax treaties, and then after 2 hours, you're like, oh my God, I didn't learn anything. Well, I make it fun. I make 5-minute YouTube videos talking about all these topics, but try to make it entertaining.
So I actually hired probably 5 years ago somebody who's quite well known on YouTube for the same style of business that you're running. He's done very well on YouTube. I had such a terrible experience with him. He was dishonest. He was very pressure. In the end, I didn't even move forward with it. Luckily, I didn't lose too much money on that.
What was his name?
I'm not saying the name. I ended up meeting a friend later, 2 years later maybe, and they're like, oh, like kind of talking about their tax situation and how they'd hired the same person. they basically had almost like $10,000. I don't want to say taken, but essentially like it was almost like, okay, you're going to pay this much to get the services done. And then you pay it, and then you realize you have to pay more, and then you have to pay more. And then essentially like, is he going to do the job? Technically, yes, but it's always been very dishonest in the way it was done. And so anyways, he basically lost 10 grand because he didn't keep moving forward on the process. Why I felt compelled to invite you on is I love that you're such like a easy to talk to person. You're obviously onto a service that's like very in demand, very in need, and very useful. Like a lot of people don't even recognize they have options. And that's the starting point, is to recognize that you can optimize your tax situation legally. So I just felt that, when you were here in Bali, it was so awesome because I've been trying to reach out to you every time I went to Dubai. We were always there at different times, but it's great to have you here and to hear it from, such a down to earth way. It's going to be very valuable for so many people.
Thank you. We really don't try to sell something because most people we can't help. Most people, they want to continue living in their home country, or they want to do a setup that doesn't make any sense, or some people it doesn't even benefit them. I was talking to a client from Norway. If he moves to Dubai, Norway will penalize him because Dubai doesn't have a tax treaty with Norway. So for him, it makes absolutely no sense to move to Dubai. And I told him that it doesn't make any sense. Just go talk to a Norwegian tax advisor and figure out what to do because I can't help you. And I'm really honest in that way. I don't just try to... Also, this is a very sensitive business. So if I do anything wrong, there's companies with governments with trillions of dollars that are going to find me. And that I thread a very fine line here.
Yeah, no, it is important to obviously always look out for the best interests of clients because, it comes out in the end, whether it be from friend to friend or, someone else posts a review. It's good to see that you're helping people out. What are some other things that people should keep in mind, though, when setting up somewhere like Dubai? Like, is it going to impact their e-commerce, their banking systems? Like, how are they going to set up kind of the logistics side of things to, rebuild and restart their business in that new country?
That's a great question because it's quite easy to do that. You can use the United States. You can use the US as a place that is your tax haven, essentially. So the US is one of the worst places for tax. But for people that are not in the US, non-US citizens, non-US residents, the US is a tax-free place. You can start a company in the US. You can use Stripe. You can use PayPal. You can use their banking system. You can use everything. And you pay zero tax. No matter how much money you make, zero. You only need to report every year. You file a form with a lawyer. The lawyer files it for you. And that's it. It takes you 20 minutes to do it. Obviously, the calculation takes you a bit longer. So you use the US LLC as a way to have other payment processors. Most people... and I really recommend not keeping any money in the US. Most people are, let's say, hesitant to moving money through the US system, the banking system and everything. But as long as you have another step of the puzzle, let's say the UAE company in Dubai, you have the UAE company, you have a US company. The US company makes money through Stripe, through PayPal, through Shopify, then moves the money over to the UAE. That money is tax-free in the UAE as long as you do the proper planning. Then you have this perfect structure where you pay zero tax, plus you keep all your payment processors, plus you have like very good banking. So that works very well for most people. YouTubers, you do need to be careful. YouTubers that make money off AdSense because there is a withholding tax on YouTube if you're a US resident or you put US as your country. But that's the perfect structure. You just need to report to the US, which that's the issue.
So what is it going to cost somebody to set up a US LLC?
It's very cheap. If you do it yourself, it's like $300. If you hire a lawyer, it's like $1,500. So not a huge cost.
Yeah. Okay. And that then is obviously like, it's kind of complicated for some people that maybe don't have a tax background. So just to kind of give my little summary of what that means is like, you can earn money as a person. So like, Christian, you can set up a company. So you could call it Los LeBlanc or Los LeBlanc LLC, whatever. So when you as a company earn money, you actually invoice the client with your business name. So the company is going to pay into, in this case, if we use that structure, it'd go to the LLC in the US. From there, the money goes into a US bank account. The money then can sit there for as short as it needs to be. You can immediately move it over to the UAE or the Dubai-based company. And now it's going from one company account to another company account. And then from there, it's up to you what you do with it. If you have personal 0% taxes because you're set up in Dubai, then you can immediately move it over to your personal bank account. Or if you don't have, let's say, personal, complete 0% taxes, you might do what's known as a dividend, where you essentially pay out a small amount of that company money to the personal side at a later date. Maybe it's to cover your living expenses, like taking out your lovely partner on a dinner or going for that dream trip to the Maldives, whatever. So essentially, you can actually keep most of your money in the company 0% taxed, even if you have a personal tax. So this video is not really going to give you personal versus company tax. That's just something you'll want to hire somebody for. It is a little bit confusing and it's very situational. So everybody's going to have a different kind of setup based on their company, their passport, their whatever. So that's basically what you do, right? Like, do you help people kind of gain knowledge and understanding over this kind of confusing world?
Exactly. And also set up the structure. So we help them as much as we legally can. We help them with the structure, set it up and everything. And one note on the personal side, so your company can pay zero tax, but if you're set up yourself in a high tax country, then that company will be treated as property of that country. So if you're living, for example, in the UK and you have a company in Dubai, don't think that that company will pay zero just because it's based in Dubai. The UK will say, no, you're the owner. You're living in the UK. That's a UK company. So they will tax it. So it's a combination of company and yourself. You both need to get out.
Oh, that's a really interesting thing. Now, what happens? This is probably one step of complexity that not everyone needs to go to. But let's say you have a partnership formed, okay? Let's just use it because we've got two different situations. Let's say the UK, which has kind of a more simple exiting structure, and a US partner. So a UK and a US partner meet in Dubai, create a company there. Like, is that going to then create a situation where the US is like, yeah, we own your Dubai company? Or is it 50% owned? Or like, what happens?
That's tricky. It depends where they're living, both of them. So let's say the UK person leaves the UK, they go live in Dubai.
Mm-hmm.
The US person leaves the US, they go live in Dubai. Now they're both residents in Dubai. The US person still pays tax on the personal level. So whatever money they take out of the company, that's tax is personal. If they own it 50-50, the company will pay zero, but it needs to report to the United States. So everything the company does, if the company invoices $100,000 to another company, it reports it to the United States. All the bank accounts, the bank balances, the bank transactions, everything is reported to the US. So that UK person now is liable for all their finances, except the personal ones, to report to the United States. That's why getting into business with a US person, for most people, doesn't make any sense. That's why a lot of US people decide to just renounce. Hey, this is giving me too much trouble. Let me renounce the US citizenship. Then I can do whatever I want. But there's no tax in there. It's just when you actually go and do the reporting, you're really just... It's a pull out your hair sort of situation. It's very
expensive
complex.
too, right? Because you'd have to hire like a IRS qualified accountant, I suppose.
And it's very hard to find one. To find one for me, it took me a couple months. And then I finally found one guy that was based in Dubai, called him up. He answered me in 2 minutes. He's like, yeah, I can help you. But I took a long time to try to find him. And I tried to be careful sending him clients because he is quite old. He's almost retiring at this point, which is tricky. I can't find another one that will help me, that knows everything.
Yeah.
But it's tricky to find a person that knows everything.
So, one thing that you had said earlier, though, is like if we set up a US LLC, we're going to have to report anyways, won't we?
You just need to report on what passes through the US LLC, not the UAE. So let's say that, so if you have a Stripe in the US, and you can also have a Stripe in the UAE, but a lot of transactions tend to fail because it's still a new system. It's not as strong as the one in the US. So if you really need it, you can use it, but you still need to report the income and the revenue of that company. But nothing else gets reported.
Okay, so the reporting is just far greater than in the last situation, the partnership, rather than the US LLC where it's just, basically, here's my online transactions, have at it.
Right, because on the partnership side, the UAE needs to report all its bank accounts. So for example, let's say you have a bank account and the UK partner decides, hey, I want to put like 50 grand of mine into the company. Okay, that 50 grand is now reportable. And they will know what bank account it came from. So now the IRS and FinCEN, which is financial institution in the US, now has access to the UK person's finances just because they're in partnership with a US citizen. So that's why it's so complex.
It's very interesting. It's insane.
Yeah.
And this might happen with other countries. Now they have a 15% global minimum tax. So for example, what a lot of companies do, specifically in Ireland, is they just sell the rights or the intellectual property of all this. And the OECD, which is essentially a group that just tries to get as much money from people, as much tax as they can from different countries and different people, they want there to be a minimum tax of 15% on all of these rights that are sold from company to company. So there's no transferring money from one company, claiming it as a zero tax place. That's done in Europe a lot with countries like Luxembourg. A lot of money goes into Luxembourg for no reason, to lower tax. That's the only purpose it goes there. And the OECD doesn't want this to happen. And most countries that are very high tax, they don't want this to happen. So what might happen at some point is all these companies formed by European nationals, or at least by those top members, they need to report and they need to say everything about their bank accounts. And banks already do this. A lot of people think that they can deposit money into a foreign bank account in Dubai and, okay, the money's there. Nobody's going to know about it. Yeah, the bank is going to report back to your country. There's no way to hide money anymore unless you go to some true assholes, like some islands in the middle of the Pacific, and you put some money in there. Sure, but most people aren't going to do that.
Yeah.
Playing a little bit of like the devil's advocate, right? Because there are people that will maybe think that some level of this is also, incorrect or wrong, or like it's illegal. Obviously, everything that's being done is completely legal. But there's obviously the other side that might not agree with this. So what are your thoughts on that? Essentially, like people who are like, that the taxes will pay for healthcare, they'll pay for the education, and kind of feeling like maybe tax optimization is
Wrong.
wrong.
There's a good argument for taxes. People say that it pays for the education, it pays for the roads, it pays for all of this. But then you look at countries that are tax-free, have absolutely no tax. And these are not countries without roads, without schools. If you go to Dubai, you'll be impressed. And my dad, for example, he asked me, like, how is Dubai so awesome without taxes? His mind couldn't comprehend it because he saw videos, I sent him pictures, and he was like, that place is tax-free? How? Well, because they gain their money through tourism, real estate fees. They grow this capitalistic society that doesn't need taxes. And it takes so much money from outside countries because there is no taxes. People buy a home there because there is no tax, no transfer tax, no property tax, nothing like that. So it really encourages people to pour money into the country. And that then expands everything else. The schools are all private. So these rich people, wealthy people, they pay for school. They pay 20 grand, 50 grand a year. They don't care. Their kids are going to school with other wealthy people. So that's fine. There's really a good argument for taxes. I think a country, I'm not a governor, I'm not a president, anything like that, but a country can be run without taxes or very minimal tax. Like in the UAE, there's a 5% VAT. It's fine to pay 5% on all purchases. Why not? Here, there's 10%. In Indonesia, it's fine to pay 10% as long as you're not paying 40 on your income. And that then runs the country.
Do you think that Dubai is going to be ever bringing out some form of a tax for personal or corporate?
Corporate, starting in June 2023, mainland companies, which are companies that do business inside of the UAE, jet ski rentals, cleaning companies, restaurants, they will have that 9% mainland company tax. In June 2023, that might be increased or that might be removed. We never know because the UAE changes their mind every month. Mm-hmm. For personal income, that's a good, let's say, debate there, because a lot of people say, yes, a personal income tax will come to the UAE. But a personal income tax, it's more than just, you'll pay 5%, 10% of whatever you make. An income tax, personal income tax, has to have some sort of benefit to it. It can't just be you pay an income tax and the country continues to run. No, there needs to be some sort of permanent residence, citizenship on top of that, full ownership of property, which is not possible in the UAE. You cannot own land in the UAE. So once they start a personal income tax, they need to give something in exchange for that. After 5 years, you get citizenship. Okay, one of the best citizenships in the world. Great, I'll work myself towards that, pay 5% per year. But if there's no extra thing, people would just leave the country.
Interesting. Actually, that brings up a valid next point, is that, something that's kind of interesting about Dubai, because I've done a lot of research on this, is that Dubai doesn't actually give passports as of yet. There's talks of it, there's rumors, but you'll always be kind of like a guest in the country, which is another reason people don't really like setting up there, right? People like the feeling of permanency and of stability. But as of right now, I've even heard that when you're working in Dubai, the moment you're no longer hired by your employer, once that contract is up, you're kind of already scrambling to leave the country because your visa is terminated that quickly too. So it's like, that's definitely maybe one of the drawbacks as of today for somebody, getting a job. We're not really talking about people getting jobs there anyways, but I think it'd be interesting when Dubai kind of rolls out something that gives people that feeling of really being a stakeholder in the country in a bigger way.
I agree. A lot of people, they want to work towards citizenship. They want to feel that they're, for example, I was talking to a guy from Yemen, which is a terrible passport, really bad citizenship overall. The country's in ruins. And his mom is from Dubai. She was born in Dubai. She's a Dubai citizen. But his dad is from Yemen. And he's not been able to get Dubai citizenship after like 28 years of living in Dubai all his life. He's not able to because you can't get citizenship from your mother.
Yeah.
Situations like that, I look at that and I think, yeah, that needs to change. There cannot be people that live their whole life, they build a business, they make money for the country, they spend it, their parents are citizens, and they still cannot get it. That's really ridiculous for me. So that will change at some point. For example, there's a lot of talks that Kevin O'Leary is already a citizen of the UAE. I'm not really sure if that's true. Will Smith is also a rumor. Pavel Durov, the creator of Telegram, the messaging app, is already a citizen. So there's talks that a bunch of people have become citizens. One Lebanese writer or singer, I think he is. He also got citizenship. So slowly opening up once they impose a sort of small personal income tax or they start creating more permanent residency opportunities. I think this is going to be a better rolled out program.
Well, I was going to say, because obviously I've asked about the sort of smaller creators that have, you know, just starting out, they're making their first kind of bucks in content creation and how this can kind of benefit them. But kind of looking at the opposite side of the spectrum, what about like the real big top dogs, the Jeff Bezoses of the world, and how would they kind of go about tax optimization in their cases, in their scenarios?
They just buy a country,
They just buy
make their own Bezos land.
Yeah.
Literally. But at that point, when you're making billions of dollars, hundreds of billions of dollars, you have many more opportunities because you can partner up with governments. You can essentially have just stock piling up as value. So what a lot of these companies do is the owner owns a lot of stock in the company that he gave himself for like 50 cents 20 years ago. And now it's worth billions of dollars, but he hasn't sold it. There's no capital gains event there. Nothing can be taxed because nothing has been sold. Even though the person is worth 20, 50 billion, 500 billion dollars, there's nothing to be taxed because he hasn't sold anything. At the moment when he sells this 500 billion, sure, there's going to be a tax there. But most of the time, these companies, if they weren't able to take advantage of these taxes and tax deductions and everything, we wouldn't be able to buy anything. You couldn't buy microphones, you couldn't buy coffee, you couldn't buy anything because the prices of the tax would increase the cost of goods dramatically. So all these taxes, like 5% here, 17% there, 3% there, you would need to spend $50 on a cup of coffee to make it worth it for these companies to sell you the coffee. So they need to take advantage of tax treaties, transfer pricing, which is sending money from one country to the other, from one company to the other. So US companies typically deal with Ireland and they send money to Ireland, and then from Ireland, they send it to other countries. If you have jurisdiction or you have setup in like 50 different countries, you can transfer between them depending on which one has a favorable tax. So what you'll see in the UAE a lot, these huge companies like Microsoft, they buy buildings. They'll buy an entire building. They'll hire 100 people, 200 people, and that's a place where they can transfer some money. They can invest into that place tax-free, and then all the profits that that company makes in that jurisdiction is also tax-free. So I can't pretend that I know what these like giant $100 billion companies are doing because I really don't. They have probably like 1,000 lawyers on payroll every single day checking every single law. And that's how you should do at that level. But that's the gist of it. They deal with different tax laws across the world, tax treaties, sending money from one country to the other, making sure that it's favorable for tax. And then the owner of the company doesn't pay any tax because he just has a bunch of stock that he's never sold.
Yeah, you always hear on the news, people are like, if there's one thing the average person gets upset about, it's like you see that report of like Amazon got like, you know, $20 in taxes paid in 2022. Like, you know, they hire the best, they know the laws inside and out, and they play the system. Now, do you think that there will ever be a day where, you know, there's actually ways of stopping that from happening, and these big companies aren't able to get around and they'll have to pay their share of taxes? Or what do you think about that? Is that day ever going to happen?
There's already a minimum tax rate, global minimum tax rate for most of these companies. They want to set it at 15%. And a lot of these companies, or countries, I should say, have signed on to it at a specific revenue level. So this is already happening. The thing is that there'll always be a way to avoid these taxes depending on the level where you're at. If you're making, let's say, 100,000 a year, $1 million a year, $5 million a year, you can't be at the same level that a company making 100 billion a year might be, because at 100 billion you could literally buy a whole country. You could buy your own island, set up your own tax rate, and then you just deal with a specific country with a specific tax rate. But there is a global minimum tax already, and there will be more taxes packed onto that. I don't see, let's say, Amazon or Google or Tesla paying 50% tax, because that 50% is just going to get packed onto their products.
Yeah.
So if you buy a Tesla, instead of spending 60 grand, you're going to spend 85 grand because that's just the only way for them to be profitable. So it's just going to hurt the consumer at the end of the day.
It's an interesting point, actually. Yeah. I think that, it's kind of an interesting thing. Like, taxes are obviously meant to distribute wealth, right? Like, to help the people on the bottom. But it seems like it often doesn't do what it's meant to do, because it's the people at the bottom that are the least informed, the least able to take action on optimizing their own situations. Like, I'd say the average American probably doesn't even hire an H&R Block type style, basic cookie cutter consultant to help them like figure out how they can keep that extra $1,000, $2,000 a year. So it's like the people that pay are usually the ones who unfortunately are meant to benefit from the system. It's kind of a perverse thing that way.
And to be honest, most people don't pay any tax. So in the United States, I can't remember the exact figure, but it was more than half of Americans paid zero in federal income tax.
What?
They paid zero. Yeah, more than half of people.
Out of choice.
No, out of like, they just didn't have enough.
Sign me up.
I'm not paying that. What?
I'm good.
I'm good.
No, they just didn't have enough income to be taxed. So
I see.
The law helped them. So most people that say, these Jeff Bezos, these Elon Musk of the world, how much tax are you paying? Yeah, $5 you paid last year. So, and they complain that, Jeff Bezos paid 3%. Yeah, 3% on 100 billion. And that's funding the roads. That's funding the school your kids are going to. So you do need to analyze this. You can't just say like, these people need to pay that 50% tax rate that most people are paying, because in reality, these people at the bottom, they're not paying 50% tax. Most of the times they're paying zero. So.
I kind of want to circle it back a little bit more into just a little bit of content creation as well, because you are a content creator. You also make content, and I am kind of curious as well to know, because you work with clients, you're able to advise them on tax optimization, but you also create content around it. So how do you find a good balance between the content that you share, the information that you can share that you do for free on your YouTube channel to 35,000 subscribers versus what you're actually being able to actually generate a little bit of extra income on as well?
Yeah, I need to be very careful what I say on YouTube, because every law is different in each country, and I get emails from different lawyers saying, hey, be careful when you said that in that video. That's not true about this other country. But in reality, I was talking to another audience or another country. So I do need to be very careful. The videos that are put out are heavily edited. So there's some things that I say, and then I think, wait, no, that's not true for that country. And then we edit that out. So I try to make it entertaining, because if not, it would be extremely boring. I cannot talk about taxes without making the person want to pull their hair out.
Bueller.
Yep.
You know that scene?
So
now just put it here. Otherwise, I just look dumb.
Yeah, I try to make it entertaining. I talk a lot about Dubai, life in Dubai, setup in Dubai, as well as passports. So what passports you can buy. Recently, I made a video on the 10 countries you can buy their citizenship. It got about 60 or 70,000 views so far in a couple of days. So people are definitely interested in the stuff.
I really like that too, because obviously here on Lost Creator Academy, the Lost Creator podcast, we're trying to show people that there's so many different ways to create content. I make my videos through travel, through cinematics. Yours are just, sharing your wisdom, your information, and your expertise. But that's the cool thing about YouTube, is like, it is a space that has room for everybody, that has a story to be told, or a certain, key piece of information to be shared. And so, when you're out there thinking to yourself that, okay, I'm not, the funniest person, or I don't know how to film a beautiful looking video, you don't need to. You can really lean into that thing that you're either good at today or the thing you want to be good at, because you can even document the process of learning. Probably wouldn't be a great idea to make a channel of the process of learning how to give tax advice, because you want to make sure you really know what you're talking about when you make your first video. But overall, it's really cool to see somebody go about content creation in their own way and obviously make it work. Like, in terms of your business, your referrals, how much of your business today comes through social media?
A lot of it now comes from people referring their friends, because they're very happy with the business, and then they refer 2 or 3 friends, and wealthy people tend to know other wealthy people that also need the service. But it started all 100% through YouTube. It was all I do Instagram, I post some stories here and there, but I don't get really clients from it. I just use it as for fun. Facebook, I don't use it anymore. Twitter, I just post like once a month. But YouTube has been my place. And I've also built another business before on YouTube. I think it's the best place to build a loyal fan base that supports you, that loves what you do, that watches that long form. Let's say it could be educational, it could be entertaining content. In the case of you, your vlogs are like truly pulling you in. I remember I watched your volcano trip to Egen, like literally 5 hours before going to Egen. And then we knew how the path was going to go. We knew how the miners were going to walk through the volcano. So it's informational, educational. It pulls you in. It's just a beautiful way to build an audience and build a business.
Yeah, YouTube is the GOAT, as we say. It's fun when you can have an epic video where you pour your heart and soul into it, and it doesn't die out in 24 hours. In fact, it gains life often after the first week, which I love that. I love that evergreen content is possible. But hey, you know what? I'm gonna say it again, guys. This is not an active endorsement, but this is somebody, myself, who has checked out this industry, has looked around, and I have to say that everything you're saying here is exactly what I've heard. It checks up completely, and it's really great to hear it from somebody that's so down to earth. If you guys are in that place where you're trying to kind of learn more about this, seeing if it's the right fit for you to set up shop in Dubai and look at your own tax optimization strategies, there is a link down below. And so Wealthy Expat, Raph here, will gladly, and his team, have you guys kind of, consulted and have that first discussion call to see. I've not even looked at this camera the whole time.
It's right there.
I just remembered I have another camera. Raph will gladly take a moment to chat with you or a member of his team and see if he's able to help you. And, like you've said, if it's not the fit, then so be it. But you should at least know, once you are setting foot outside of your country, becoming a digital nomad, at least have the tools and knowledge to know what to do when the time comes to optimize your own tax strategy. Because if not, it's money left on the table.
We'll help you with everything and also guide you in the right direction. So if we can't help you right now, maybe we can help you in the future, or maybe we can tell you, move to that country because that country has a treaty with your country. So we're really open to this. We don't try to sell you something because we legally cannot. If we cannot help you, like that will get me into deep trouble. Mm-hmm. So I try to be as open as possible, honest.
Speaking of the future, Ralph, I'm curious to know what are the next steps for you? Because I know you mentioned that you've been kind of looking or exploring Portugal as an option as well for you. So what's the plan there?
I have Portugal residency, so I'll keep that going on. I'm also looking at other countries. So Seychelles is a big one. I really like it. I was there a while ago, and they do have a residency program that I'm looking to do. Wealthy Expat in general, I'm looking to turn it into this holistic way
like yoga. You're gonna do yoga?
No, not yoga, but
sound healing.
Kombucha.
Yeah, I have kombucha.
Wealthy Expat kombucha coming soon.
Singing kumbaya in the weekend. But the main goal is to not just help with taxes, but also life optimization in general. So if you don't want to live, let's say, in Dubai, then how do you live in multiple places? How do you buy property in multiple places as you are doing? You're kind of creating the perfect wealthy expat lifestyle, having homes in different countries, traveling all over the world, enjoying the beauty of the world, the lifestyle that you want to create, where you want to make videos. And that's where we're heading towards, just basically teaching people how to do all of that, which I do on a daily basis.
Love it.
Awesome, man. That's so sick. Well, thank you so much again for being here with us today. Thank you so much for your wealth of knowledge and expertise that you shared with us.
Pun intended.
Pun intended. And Christian as well. Thank you so much for co-hosting today. And yeah, guys, if you're at home, have a drink with us, and we'll see you next week.
Well, it's a little late now. I think it'll be awkward. If they're pulling out the whiskey, maybe put it away and save it for the next episode.
Yeah, we'll see you next week at the next Lost Creator podcast. Thank you once again.
Thank you.